Okay, folks, welcome to a quick afternoon update. We're seeing the miners pick up steam here. You're looking at the GDXJ. It's a 15-minute chart. Let's pull back, get a macro view. And you can see that we are very close. Here's a secondary resistance level from which we've broken out of. Let's get rid of this. This is blocking our way. And here is a primary resistance level. So, no doubt that the gold miners are picking up steam. Silver miners picking up steam. Here are your higher lows. Exactly what you want to see. Speaking of silver miners, SILJ on the verge of a breakout here. I won't spend too much time making drawings, but I think you can catch my drift. We have a beautiful base from which to break out of. Why is this all happening? Look no further than the US dollar. US dollar is now firmly down in the 80s, flashing an 80 handle. They've been trying to defend it. They're failing. We're now at weekly lows, or we hit weekly lows earlier today. That's a signal by the market to get long of commodities, to get long of gold, silver. Hey, Franklin. How are you, sir? Bitcoin, ripping. Up nearly 5.33% on the day. It looks like it's going higher. And it's only a matter of time before people start saying, why is Bitcoin ripping? What's the real reason for it? Well, it goes back to this. Take a look at the bond market. Bond market's been fairly weak. Yeah, we're eking out a gain at current. But the dollar, we hit lows this week that we haven't been out since April of 2018. So we're poised to close out the year with an 80 handle on the US dollar. Nothing more need to be said, except when you take a look at the CPI and how the CPI rallies along with Bitcoin. We've done this analysis before. And as goes the dollar, inversely, we know so goes silver, the miners, gold, oil. Let's take a look at oil. It was weak the other day. I haven't looked at it today. Anthony, Happy New Year to you too. Thanks, Ant. What was I going to take a look at? Oh, light sweet crude. Thanks for the comment, Franklin. Appreciate that. Believe me, those comments make it all worthwhile. So oil, yeah, down on the day, but it's still, I mean, let's pay attention to the macro view here. Right? Forget about the 4-hour chart. Forget about the daily chart. What's the weekly chart telling us? We're putting in higher lows. We hit resistance. That's why we're stalling out here. Let's see what equities are doing. They've given up some gains, but still positive. Look at all the topping action here on the S&P 500. I mean, this doesn't give me the warm and fuzzies where I net long of this market. Here we are during a seasonally favorable period of time of the year. Yet, we're possibly flashing, possibly being the operative word, possibly flashing a lower high. Once we break or if we break, I should say, below this lower band of support, well then we're going to be in correction territory. So let's see how we close out the day today. The last I looked, the Russell was rallying back. It's gotten clubbed this week. It was a leader, now a laggard. Up 1 1/3%. But a lot of damage has been done here this week. We've broken out of a 4-hour time frame. The question is, does it hold? Do we put in another lower high? I don't know. 1.5 trading days left to go. And if you want to take a look, just going back to, I was debating what to talk about, so forgive me if I'm a little bit scattered because I never arrived at a conclusion. If you want to take a look at a couple of charts from a macro view and to identify, I did a video about gold, I think it was 2 weeks ago, about gold going into 2020 and how it might double. Let's bring up the Van Eck Junior Miners monthly view. Let's then bring up the US dollar. And then let's divine what we want to be long of moving into the new trading year. Here's the GDXJ monthly time frame with 1 trading day left to go in the month, the quarter, the year. We have a bullish key reversal bar for the month of December. Now we know that the miners trade inversely of the US dollar. So to get a feel for whether or not this reversal bar is A, for real, B, we'll get a continuation move up higher, we need to take a look at the US dollar. And how is it performing? The dollar is taking a nosedive. And we are not even at support yet. We still have to drop down to 88.15 to find reasonable support. So as we proceed into the new year, especially with Bitcoin ripping right now, I can't help but think that gold and the miners, silver as well, they are going to rip too. And when you take a look at the GDX monthly time frame, take a look at your Stokes and your RSI. What are they doing? We don't just simply use RSI and Stokes for overbought, oversold. That's not what we use it for. We use it to gauge momentum. What are our odds that we will get a continuation breakout here? What are our momentum indicators telling us? Are we putting in higher lows and higher highs? Well, let's take a look. Higher lows, higher highs. Higher lows, higher highs. Looks good to go. Monthly time frame. Hey, Alex, top of the morning to you. Brett, haven't seen you in a while. UTSL. Is that moving? I think I saw that moving when I did a scan the other day. What the heck is this? All right. What else do we want? We'll take a look at the utilities. The UTSL, which Brett just mentioned, is a leveraged ETF, putting you longer the utilities. Yeah. Heck of a correction. I don't like these Stokes, Brett. But we've seen them hook up before, below the 50 mark. That's a Direxion fund, I believe. Here we go. Booyah. I would stay very small here. If yields begin to move lower again, I think the utilities are an interesting play because they normally trade inversely of the 10-year yield. I am wary about the yield breaking out, and I don't like these Stokes. We're losing momentum. Might this fade? We don't know. Last week was a good week. Can you nibble here? Sure. Just stay small. Daily chart. Daily chart looks really good here. A lot of froth has come off. A lot of good support down below here. So, sure, I think that this is interesting. But until our weekly Stokes begin to flatten out, hook back up, I would stay a little bit small here. And it's a leveraged ETF, so it's got a lot of volatility. You can make money on it. Can we take a look at Plug? What the heck? Let's take a look at Plug. I don't like it. I think it's had a nice run, but if you're looking to buy it, I don't like it. Would I necessarily short it? I don't know. It's a rip your face off stock, but it's approaching that territory where you could think about shorting it. I would only want to short it if I had an edge, meaning RSI above 90 on a daily, weekly time frame. We don't have that. I would not be attracted to this as a short. Too risky. Danny, how you doing, buddy? Topping action here, outside reversal action here. I think you're going to come in here. Could it embarrass me? Could it shoot up higher? Sure. I just don't like the risk reward. Daily chart doesn't look as threatening as does the weekly chart. To me, this is pretty threatening. This is an outside reversal week. Once you're in a bull run and you start taking out the prior week's lows, I get nervous. Me personally, I would avoid. Could it go up higher? Sure. I've seen crazier things. All right. What else do we want to talk about? Oh, you know what? I didn't go into the members area to see what was requested. Nvidia, Matt. Let's bring up Nvidia. Interesting. Daily chart. Nvidia's broken out. Let's get a feel from a monthly chart. Not as bad as what it was earlier in the month. I mean, the weekly chart's actually looking pretty good here. I don't know if Matt is out there, but I think Nvidia. Hey, Nestor. question, we already have that short position as a hedge against the Qs to the short side. Let's talk about that in a moment. Very good question, because seasonality is now fading. Now we're going into January, New Year, and we are very extended. The news is out about the stimulus. It's porculus. Yet again, more debt, more spending, and a lot of the oomph to the market has already been pulled forward. So I don't expect much more upside on the Qs. So let's talk about that in a moment. Let's finish off with Nvidia. Denny, I just want to say thank you so much for all you do, Bob. Thank you, Denny. Appreciate it. You're welcome. I wish you and your family a happy New Year. Same to you, my friend. Look forward to chatting with you in the new year as well. And stay safe. So many people getting sick lately. So back to Nvidia before we go off to a short conversation about the Qs. I think Nvidia is shaping up here very, very nicely. We are poised to break out. We have not broken out. Let's take a look at seasonality really quick. We'll go back to 1999. Because if memory serves me, yeah, January is not a good month for Nvidia. Up usually around 38% of the time. So seasonality, I'm using TrendSpider, 50% off. Use the link below. Let's use a 10-year view. Up 55% of the time. A bit better. But January, a bit rough for Nvidia. So I would wait for the breakout. We're right there. On the daily chart, we have already broken out. Let's see if we close above this resistance level in red. And once we break out and above, $539.94, where this volume shelf is, I think we can go considerably higher given the consolidation of the semis of Nvidia, and we make it higher highs. Sam, how you doing, buddy? I'm doing well, thank you. All right, to Nestor. Is it time to short the Qs? I went over this chart yesterday. It's worth going over again. I'm just going to do a quarterly chart. And this matters because Microsoft is, I know some of you are out there saying, he just went over this 24 hours ago. It's germane to the question I'm being asked, so just bear with me. I have OCD, all right? So I take a grip on something, I can't let it go. So Microsoft quarterly chart, RSI 93.05. Now, why am I going over Microsoft? Well, the question was, is it time to short the Qs? My answer is that I want to short Microsoft because it's technically overbought, bubble territory, and it's the largest component of the triple Qs. So as goes Microsoft, in all probability, so goes the triple Qs. The second largest component is Apple. Apple, on a quarterly basis, has RSI at around 84.5. And we're leaning into the third standard deviation Bollinger Band. So what we're seeing set up here is we're breaking down the Qs, right? We want to take a look at the individual names, the largest components, to see how are they behaving. Now, the charts still look healthy, but they're frothy. So it's coming time very, very soon to lean into the short side of the triple Qs. I use the SQQQ. It's a leveraged ETF, very volatile, not for the faint of heart. If you want to short the Qs, just simply short the Qs or find another vehicle. Or look to buy leaps on Microsoft going out, I don't know, a year, 2 years. and get short using out of the money put options. But these names on a quarterly time frame, 1 day left to go in that quarter, are very, very frothy. Now to the Qs. Quarterly time frame. Think about this. Quarterly time frame of a major index. We have RSI at 83.75. There's one problem with me spitting out these numbers, and that's this. Just when you think they can't go any higher, they go higher. They go parabolic at the end of that bubble. So while I would love to say, stand here pointing at my quarterly chart saying, man, you can't lose money right here, right now by shorting these names, it's probably still a little bit early to go shorting them. We haven't seen a break in the market. We haven't seen that parabolic move up higher, that blow off top. Not quite yet. Because that's when I want to get real short of the market. We're not there yet. We're still creeping and inching up higher. Are we overbought? Yeah. Stokes are overbought. RSI could definitely move up higher. Not loving the price action. This is the third consecutive day in a row of filled candlesticks. Sign of indecision at all-time highs. Not healthy. You want to blame that on an abbreviated holiday week? Okay. But the last time we saw this was back here in September. It didn't end well. So in all probability, we're going to break out yet again early in January. That's the feel I get. So I don't see a compelling reason right here, right now, to fight the market to go getting more short than what we currently are. I think we're going to have a better risk-reward entry point in the near future because we may begin the new year off strong. I'm not getting the warm and fuzzies that it's going to last. So let's wait. Let's watch for reversal days, a distribution day. Then they'll rally the market back. Then you get another distribution day. Then you'll know institutions are exiting, and that's the time to go leaning into the short side. I don't think from a risk-reward perspective that we're there yet. So shorting's a risky business. We take it seriously. So I would rather wait before we fought the market because you're going to hear people constantly saying you're fighting the Fed. Frankly, I think the Fed has lost control. Take a look at this. The Fed is doing nothing but being accommodative. But look at yields. Yields ripped up higher this month. And they've been doing nothing but increasing the size of their balance sheet. So I think a lot of people are getting lured into the fact that, or the opinion that the Federal Reserve has your back. They're going to keep rates low. What if they don't? What if they lose control? I mean, this is a weekly chart. And this is not a bearish chart. This is a chart that's telling me that at any given time, we could wake up and see a one handle on the 10-year yield. And we haven't seen that since March of this year. So if we have a weakening U.S. dollar, rising commodity prices, what does that do? It increases input costs of manufacturers. So yeah, do they sell more goods at a cheaper price overseas? Sure, but it's not a pure driver of their bottom line EPS. Their input costs rise as well because commodities are priced in U.S. dollars. So inflation will soak in. So what happens if you get the double whammy of inflation along with yields pumping up higher in 2021? I don't think anybody's expecting it, but the chart is telling you, you better get ready for it. It may not happen, but get ready for it. So that's my thought. So I think that, Nestor, Qs are heavily tech dominated. If you see yields rise in 2021, the tech names are going to take it on the chin first. So that's when we want to start looking to short those names on a shoot up higher in yields despite the efforts of the Federal Reserve. If it's perceived by the market they've lost control, look out below. So let's wait for the macro picture to take hold. I don't think we're there yet. You start flashing a one handle on the 10-year yield, all of a sudden people are going to start to take notice. We're noticing now. We're getting ready. But the mainstream media, they're not going to pay attention until they wake up and see, oh, look at this. A one handle on the 10-year yield. That's when things will get interesting. Right now, they can keep pumping up the Qs on very light volume. Look at this. All-time highs on ridiculous volume. And this can continue. That's my long-winded way of saying, let's bide our time. You'll know when we're ready to go because I'll be hot and heavy talking about it. You're welcome. All right. I have a bunch of coaching sessions to get to today. So I'm going to log off here in a couple of minutes. If somebody has a chart they want me to go over, I'm here to do it, but I have to get to coaching sessions. If you want to join in on a coaching session, there's a link below with all the details. And if you're a member, you get half price on those coaching sessions. So take advantage of it. All right, let's scroll back. I want to take a look at the dollar. Dollar's still holding this breakout here. But we've been here. We spoke about this yesterday afternoon, right? We had a breakout. That was yesterday. Here. We had a breakout. It failed. We had another one overnight. Breakout. It failed. Do we get this again? We just may. FCEL. Fuel cell? Trying to test my brain. FCEL. Still got it. I haven't looked at this one in a while. Okay. Daily looks good. Ooh. Early stage. The thing has doubled in 2 months, and I'm saying early stage. To me, it's still, it's actually more than doubled. It's still early stage here. I mean, when you take into consideration where the stock has been in the past, where has it been in the past? FCEL. Thanks, Sam. Thank you very much for that. I appreciate that. Very nice of you. Let's go back in prior history. This has had a bunch of reverse splits. All right. So you can see that we've been higher in the past, a lot higher in the past. Going back to, I'll drink a lot of beers for that amount. Thank you. I got another one. Thank you very much. I appreciate that. In OVG. Thank you very much. I appreciate that. Wonderful. Thank you very much to both of you. That's a lot of beer I'll be drinking. So just beware here. As we take a look at the macro chart, we have resistance, and a lot of it, at 1437. What was the high of the quarter? 1391. So we just came just shy of it. So beware. Let's go back here. What I would do here, I don't think I could buy it. Not right here, not right now. I'd like to see another pullback. And this is one I'd be interested in if I got it at the right price. I'm just going to put 1450 resistance. Okay. So I wouldn't buy it here. May it go up higher? Sure. But I'm not going to buy it. Not right here, not right now. I would wait. Wait for that pullback. Wrong chart. You still might get it. I don't see a compelling reason to go getting long right here, right now. Might I regret it? Yes. But wait for the pullback. Especially if you get a sell-off in January. And January is typically a very weak month for FCEL. The thing to remember, though, it's been in a long-term bear market, to be fair. So let's not ignore that. That facts matter. It's breaking out now. So we don't want to trade simply off of seasonality. We want to trade off the technicals as well. So fuel cell, definitely interesting. I would wait for a pullback retest. If you're going to nibble here, I have no problem with it. I would just stay small and wait for a breakout above 1450. Then that's when it's sending you a signal. It's under accumulation. Watch the volume bars. All right, folks, I got to jump on a coaching session. Everybody have, if I don't talk to you tomorrow, everybody have a very Merry New Year. Please, a Happy New Year, I should say. And God bless. Stay safe. Oh, well, hold on. I just saw Manoj. Manoj, you still there? He asked for V. Sorry, Manoj, I didn't see it. Visa's a monster. Monthly chart of Visa, breaking out, monthly time frame. It's a monster. We close above 218. That's a macro breakout. We're going a lot higher. Take a look at the value of the automated trend lines here. It's showing you the breakout on my manually drawn line. That, however, is the artificial intelligence is picking up resistance immediately above. So I still think it's okay to buy here. If we close above 218.76 per share, stay small, add more on a breakout above 221.50 per share. And with that, folks, again, take care, be well.